Good morning and welcome to the day ahead. It is Wednesday, April the 13th. I'm Andrew Gagan. Well, it was a volatile ride on Wall Street overnight. Equities reversing course to end lower as tech bids faded and inflation jumped to a fresh 40-year peak as expected. The March quarter CPI rose 1.2% last month in the States, its biggest increase in 16 years, taking the annual rate to 8.5% and cementing further the case for a 50 basis point hike from the US Federal Reserve next month. Well, US Treasury yields edged lower with the 10-year posting its first decline in 8 sessions, though it remains up nearly 45 basis points this month alone. The about face on Wall Street began in earnest before those hot inflation figures when Fed Governor and former Dove, Lael Brainard, reiterated the need for the central bank to expeditiously take on decades-high inflation. Well, the fate of the Fed now all but sealed, with the markets now pricing in a 3% Fed funds rate by the end of the year, with a 50 basis point move expected for May, June, July and possibly September. The next catalyst for markets, first quarter earnings kicking off with the banks tomorrow. JP Morgan, the first cab off the rank, and already warning of a nearly $1 billion worth of losses due to exposure in Russia. Year to date, the stock is down 21%. However, regardless of this week's numbers, a low interest rate environment is inevitably good for the big lenders once the yield curve uninverts. On the broader outlook, analysts have curbed their first quarter expectations, with S&P 500 earnings growth now forecast to be 6.1%, down from the 7.5% at the beginning of the year.
But the bottom line here is they're still accelerating earnings if you're a big company. So we're now looking at a market that depends on mega caps, which, you say to yourself, was that good or bad? I think it's just what it is. I mean, it has the ability, like you see with the S&P 500, 4,400, because they make up 20-25% of that market cap weight. The good news is you're from your 401k investment portfolio perspective that's in an SPY index fund, it's going to hold up because these big companies have the profits, the reinvestment, the share buybacks to keep that quarter, literally a quarter of the S&P 500 afloat.
Meanwhile, European markets remain under pressure. German banks the biggest drag as investors hit the sell button after an undisclosed investor sold stakes in both Deutsche and Commerzbank. The Ukraine crisis also weighing heavily on sentiment amid rumours Russia is using chemical weapons in Mariupol. UK inflation running at 2014 highs, with the European Central Bank policy decision in focus tomorrow. Well, drilling deeper into that CPI print out of the States overnight, the closely watched core measure lifting by 0.3% in the month, falling short of analysts' expectations, although the annual pace of 6.5% is the strongest since August 1982. Analysts widely expect these annual inflation prints to be the peak of the cycle, but how rapidly the pace decelerates is key to shaping Fed policy from here. US President Joe Biden again moving to respond to rising price pressures, saying Americans' ability to pay for gasoline should not hinge on whether it declares war or what's going on with a war half a world away.
We saw today's inflation data. 70% of the increase in prices in March came from Putin's price hike in gasoline. We need to address this challenge with an urgency that demands. That's why I've called on Congress to move immediately to lower the cost of families' utility bills, prescription drug bills, and more, while lowering the deficit to reduce inflationary pressures. And that's what we've done. We lowered the deficit by $300 billion so far.
In FX markets, the greenback retreating from 2-year highs. The Japanese yen continues to fall, hurt by the Bank of Japan's commitment to maintaining its ultra-easy policy. The euro down, unable to hold on to gains from a mini relief rally earlier in the week as uncertainty returns on the outcome of the French election. The Aussie dollar flat despite the price of oil surging more than 7% in overnight trade to retake that $100 a barrel handle. Markets will be looking at the Reserve Bank of New Zealand policy decision at midday Sydney time. A 50 basis point hike is widely tipped, but that isn't a done deal. And in the crypto market, Bitcoin regaining some losses overnight, did move back above 40,000, has since slipped back. Shiba Inu surging more than 20% as it debuted on Robinhood Markets platform, along with tokens for Solana, Polygon and Compound. So investors will be looking for direction this morning when the market opens locally, with SPI futures flat, more marginally negative there. Commodities again the key focus, oil prices jumping around 7% as China relaxed some of its COVID restrictions in Shanghai, which eased concerns about demand. Russian oil and gas condensate production has fallen below 10 million barrels a day to its lowest level since July 2020, which also supported prices. And the iron ore futures price added nearly 2% as China pledged to stabilise the economy. Gold futures are also higher. And that is your day ahead. See you again tomorrow.